A very good afternoon to all. Hope you all are doing safe at home. I welcome you all to our new webinar series, Tally CA Connect. So we have a series of webinars planned every week. So today we begin with our first webinar of the series, TCS Management in TallyPrime by CA Venugopal. I'm sure most of you here are already familiar with him. For those who don't, I'll just like to give a brief introduction. So CA Venugopal is a practicing chartered accountant. He's an active speaker at ICI at various fora, and he is also specialized on technology, especially on its implementation challenges. He is an author of various industry-specific handbooks on GST, and he is also the man behind in the development and managing cloud applications such as TaxSmile, Insta Financials, and others. Not the least, we are proud that C. Venugopal is also Tally Evangelist. I welcome you, sir. Thank you for being here today.
Thank you, ma'am. Good afternoon.
And before we begin, I'd like to, so we shall take the questions at the end, since it is only in 1 hour session. And you can also drop in the questions at the Q&A box so that we can track in case we misanswer it. So over to you, sir.
Madam, is the screen visible?
Yes, sir.
Okay, all right. Thank you. Thank you for the introduction. And I'm very happy that the Tally has taken a very unique thing of creating a Tally community for chartered accountants. And the link which you are seeing on the screen, community.tallysolutions.com, where there is a CA community, and I'm sure we will be, like including me, will get benefited out of this initiative, where most of us are, like when we say an accountant, we know some of the other clients of us use Tally, or at one or the other point, the organization before scaled up, they have been with the Tally. And I always relate to Tally with an Excel. Like most of us use the basic functions of Excel, but there are some users who use little advanced functions and features. And those who use advanced functions and features, they find more value. Likewise, even Tally, most of us use the basic purpose of the accounting, but there are a lot of transactions which are ability which the Tally can use. And the objective of creating the CA community is also to get familiarized with various features that are there. And in today's discussion, we are going to discuss on the tax collected at source, both legal provisions and how do we handle this in the Tally in terms of reporting. Now, why TCS and what is the peculiarity of it is a little different from the TDS, and because the TCS, most of us got used the habit of recording transactions on accrual basis. However, the TCS brought in this concept on realization basis. So how do we accommodate these challenges is what we are going to see. If you have any questions, I request you to put in Q&A. I will take the session up until 2:45. After that, we will take up the Q&A thing. So we'll spend half an hour on the understanding all the various nuances, the theory part of it. Then we will look at the configurations that needs to be done in Tally to ensure you have a smooth basis of recording. Then we will record some transactions and actually see how it needs to be accounted. Right. So let's begin with understanding some of the basics on the TDS versus TCS. I'm sure most of you are aware, but it's good to have that basic clarity. Normally in a TDS, what happens is there exists a seller and or provider of services. This person supplies some goods or services to a buyer. So there is a buyer and the seller. Whenever seller makes a supply of goods or services to the buyer, while making the payment to the seller, if such transaction value exceeds the specified limit, for example, I am providing an audit services, professional services, and my bill value is 1 lakh. It is exceeding threshold limit. The contract has threshold limit interest. So every type of transaction has a specified limit which is specified, we know, under section 194. If that value exceeds, what does the buyer do? Or now I will use the new word called deductor and deducting. So the buyer will be called as a deductor who will deduct the TDS from the gross amount to due. So in the amount that is due, which needs to be paid to the seller, he deducts the gross amount, and he also issues a tax remittance document. So how does he do? He basically, every periodical, so we know by 7th of the subsequent month, he remits the taxes to the government, and every quarter he files a TDS return. And we are all aware that the salary, non-salary, everything is different. And once the TDS return is filed, the deductor gives a tax deduction certificate, which is 16A, generally on a quarterly basis. This is broadly on a TDS. When it comes to TCS, a little contrast to this. In the same way, the seller here in this word, we are using the word now collector. The adjective to the seller is now become collector. When he makes some sale to a buyer, he makes a sale to the buyer. Now buyer is now called collectee. He in the invoice, if it is goods, then along with the payment for the invoice, he will also collect something called TCS. So here the seller, if I am the seller, I am collecting TCS. While in the contrast, if I am the buyer, while giving it to the seller, I am withholding some amount and giving it to the government. Here, I as a seller, I am collecting some money and remitting the money to the government. Now, after I remit it, I issue to the collectee. As a collector, I will issue the collectee a tax collection statement, the form 27D. This is what I will be issuing certificate. And again, whatever is the periodic intervals, I remit the taxes and file the returns with the income tax department. So contrast is, in case of a TDS, buyer at the time of payment, he is deducting and remitting to the government. In case of TCS, seller along with the sale value, he is collecting some additional amount and remitting it to the government. Broadly, those are the two differences. Now, the new TCS provision which came effective last year. So what does the new provision talks about? First and foremost, TCS is not new. It's been there for quite a long time. And the new provision which has come is firstly for goods. Please note, it is for goods. Not that every sale it is applicable. Here it is applicable only for the goods, and this tax is payable by the seller. If the seller's turnover is more than 10 crores, only then the TCS is applicable. If the seller's turnover is less than 10 crores, which year? In the previous financial year. Every time when you are looking at is the income tax previous financial year, if the turnover is exceeding 10 crores, then this new provision is applicable. Not just one. Is another thing, this has to be collected from the buyer at the time of sale. So if I'm collecting in advance or the post, it is collection. This is linked to the collection. And the relevant section is 206C. Is it applicable for all the sales I do? Answer is no. It is applicable only if the amount which is collected during the year, exceeds a turnover limit of 50 lakhs. If it is exceeding 50 lakhs, then only the provisions of TC is applicable. First, it is for goods. Second, the seller's turnover should be more than 10 crores. Third, the buyer should be making payment to the seller more than 50 lakhs during the year. If these three conditions are applicable, then the TCS is to be done at the rate of 0.1%. If the PAN is there, well and good. Otherwise, it becomes 1%. We know last year, owing to COVID, there was a reduction in the TDS rates to facilitate the cash flow. So there was a 25% reduction in the TDS rates. So the 0.1% became 0.07%, 75%, and 1% has become 0.75%. It was only from 1st October to 31st March. And whenever there is a rate of tax between a time periods, it's always important to check the notifications and updates, because these get changed time to time owing to various provisions. Next, the form number 27D as a certificate, it has to be issued to the buyer. Since seller is collecting some money over and above the regular amounts due, he will issue a certificate called form 27D, and what he files to the government is form 27EQ on a quarterly basis. What does buyer can do with this? Buyer has obligation of annual income tax payments. This will be treated as if it is an advance taxes which have been paid, and it can be adjusted against this. Broadly, this is the new TCS provision that has come in. Now, there are already TCS which is there in the past. It's not that it is not there. And there are two prominent, or I'll say three prominent things which we know. Substantially quite old, scrap, sale of scrap. We already know that the TCS was applicable. Then after the demonetization, around that period, we know that when the sale of gold and jewelry exceeds the per transaction or per year, then the TCS has been introduced. Whenever a motor vehicle has been purchased and the value exceeds 10 lakhs, this TCS has been introduced. So these also have been coupled with, I've just given a transaction. You have to look at entry to entry, because some are applicable if it is paid in cash, some are applicable based on the total quantum amount. Like when I say scrap, it is irrespective of it. So you also have to look at where each provision separately. So in today's discussion, I was covering more from the new entry 206 which has come. Broadly, what are the due dates? It is again a quarterly due date. The due date of filing form 27EQ, which is a quarterly return, is Q1 by 15th of July. So by 15th of the subsequent month in the quarter, one has to file the quarterly return. While remitting the taxes to the government, whatever the collections have been made, within 7 days from the end of the month, the taxes so collected have to be remitted. After filing the necessary quarterly returns, the statement, which we call it as 27D, has to be issued to the collector has to issue the statement 15 days from the due date of the filing. So for April to June would become 30th July. So these are the due dates in the law. Again, due dates, quantum, rates, these get changed time to time owing to the circumstances prevailing. So these have to be looked into, but this is just a broad idea. Now, there is a new provision under the Income Tax Act. The TDS also has come. Let us understand a little difference between the new provision of the TDS and the new provision of the TCS. And along with this TCS, we know there's one other TCS that has come in 206C 1H, which was applicable from 1st October. It also expanded the scope to foreign remittances. So generally, the goods we have seen 10 crores turnover, where volume of transaction 50 lakhs, the TCS is applicable. But for services, This services also has come in if you are doing any remittances abroad under liberalization remittance scheme without going through all the FEMA and detailed the compliances. The government has given up to certain threshold limit. You can directly deal with your authorized dealer, your bank, and you can do the remittance. And for these remittances also, these provisions of the TCS has come in. However, today we will be looking more from the configuration. But this change which have come between TDS TCS, let's understand that. 194Q is a new entry that is applicable from 1st July 2021. In a month from now, this new provision section 194Q is applicable. Contrast to that, section 206C 1H which exists. What is the difference between this, and why are we discussing this? The law itself is complicated, firstly. Second, we need the support of technology for three things. One, to comply with the law. Second, to check exceptions, non-compliance. Third, to file the returns and do the reconciliations. When I say comply with the law, same transaction could be subjected to TDS or TCS. Same transaction which there is a TCS, I get into all threshold limits, but there are some exceptions which will come in. Like there is qua transaction, which is like if it is goods applicable, services not applicable. Qua customer, if it is my government, if my the other side party is government, not applicable. So qua provision, if TCS is not applicable, TDS would kick in. So one should be really aware of it. What is the contracts between 194Q and 206C? 194Q is applicable on the buyer of the goods. Exactly different. 206 was applicable on the seller if the turnover is exceeding 10 crores. Okay, so little confusing. Second, the rate of TDS. Here I have to do TDS at 0.1% on purchase of goods. Here I have to collect 0.1% on sale, provided the purchase value is exceeding 50 lakhs, provided the sale value is, I'll not say sale value, aggregate value of the collections, that is the right word, if the aggregate value of the collection is exceeding 50 lakhs. Now, why I'm saying that sale value is not the right word, I'll come. But here, the procurement value is more than 50 lakhs. Difference between a TDS and TCS here, one subtle difference is in case of a TDS, whether you credit it to a suspense account, whether or not you make a payment, the provisions of TDS will kick in if the provisions would be kicking in if you have accounted it as a procurement or a purchase, the TDS is applicable. Now, the concept of 194Q will not apply if TCS is applicable. Now, what is this contradiction? Government want to increase its collection base. For example, seller is making a supply. Seller is I have a customer whom I am making all the sales. Let's say my transaction with my customer during the period is 5 crores. My transaction with my customer during the period is 5 crores. However, the provisions of TCS is not applicable. The provisions of the TCS is not applicable if my turnover is less than 10 crores. On the contrary, the buyer's turnover has exceeded the 10 crores. So the government said, let the buyer do the TDS, so that let this transaction get captured. Now you may say that, isn't it putting more onus on the compliance? Will it not impact MSME, small traders and everything? And we know MSME, micro, small, medium enterprises. In my view, this provision is not applicable to a micro enterprise. It's like See, the government is looking at someone who has an ability to buy and sell more than 50 lakhs to one party alone. Maybe they will have more compliance, the thing. So government is looking at from that perspective. So please see, there is a difference between 194Q and 206C1H. So both have different application date. What is the challenge? The challenge is here the law says in the TCS is applicable on receipt, which is consideration on realization basis. TCS is applicable only on realization basis. But we have been used for realization or accrual. And realization, if that realization is exceeding 50 lakhs. Now, the question that comes is, I have exceeded 50 lakhs. For example, during the financial year, my transaction value is say 75 lakhs. The question that comes is, should the TCS be done for the 75 lakhs or the value that is exceeding 50 lakhs, which is 25 lakhs? The answer is 25 lakhs. But how do I split a transaction? How do I, like, I have reached the threshold limit, say 45 lakhs, but my next transaction was 10 lakh sale, which I did. It is becoming 55 lakhs. So within that invoice, sale invoice, which I'm collecting, only over and above that 50 lakhs is 5 lakhs. How do I split? This is the second challenge. First challenge was it is applicable on realization. Second, it is exceeding on the threshold limit. The third challenge is this has to be considered financial year wise. So every year I have to check. So my system should be able to detect that, okay, the applicability is to be checked year on year. I might have the books of accounts consolidated over multiple years, but I have to check in one financial year. Lastly, my turnover should be exceeding 10 crores. So this is the another thing. So thankfully, the word used is in the previous financial year. So in your tally configuration, the control is at your end. So the lever is with you, because beginning 1st April, you know whether 10 crores exceeded or not. Again, the common question that people ask is, what is this 10 crore that I should be checking? Should it be bank receipt? Should it be income tax turnover, or should it be GST turnover? The answer to it is from the books of accounts, the finalization which you are doing basis your AS9, whatever is the revenue recognition. In the books, whatever you are finalizing as your turnover, that is the basis at which you have to do. This TCS is also not applicable for a transaction on export or import. Okay. Generally in import, you file bill of entry and you clear the goods. On exports, when you file the shipping bill, there is a party who is outside India, who definitely has no connection with the income tax jurisdiction of India, unless otherwise there is a permanent establishment. So the government said, okay, let us not extend the provisions of the TCS to the foreign party. Now, please note all these provisions, because we will be going back to the tally and we'll be doing all these configurations to see that the transaction goes through. Then the buyer is liable to TDS. So if there is a TDS applicability on this transaction, TCS is not applicable. Classic example, services. So when I'm selling services, buyer is doing TDS. So this is sale of goods. So TCS is applicable only for goods. Then if the buyer is central government, so if the buyer is a local authority, central government, in these cases, again, TCS is not applicable. So I have said the transaction, the legal applicability is qua the supplier looking at my turnover, qua the transaction goods or services, qua the customer, whether he is government, non-government, domestic. So looking at combination of this, the transactions are to be clarified. Now let us see how we do this TCS in TallyPrime. And TallyPrime, we all know, after the ERP 9 and the release 6.6, the next version of the Tally upgrade is TallyPrime. The look and feel, the left side corner, the blue color, the screen which you are seeing, That is the look and feel configuration of the TallyPrime. What is that one should be knowing in TallyPrime is most of the customers would want, even though the law provides that it should be on realization basis, most of the customer wants to do on invoice basis. Why? Is it legally barred? The answer is no. The government, the provision says if I am making a sale to you and the sale value is 60 lakhs, when I collected the money from you, at the point of the collection, the TCS is applicable. From that point, by next month 7th, I have to remit, and that quarter end within 15 days, I have to file the return, and 15 days from the date of filing, I have to issue the TCS certificate. So that's the point. But for the ease of the compliances, the customers chose to advance the compliance. The customer chose the advance of the compliance for two reasons. One, internal control purpose, so that I know what to be remitted, even though this is in early, it is internal control, so that what is the amount to be collected. Second, I should also intimate to the other person that this transaction is subject to TCS. Over and above this, you have to make a payment of the money to me. So when I'm issuing the invoice itself, if in the invoice I record, so much TCS has to be paid, you can make the payment and you can record it at the time. You can record it on the payment on the invoice basis, and you can remit it. Now, there are institutions who wants to do a hybrid practice, even that is permitted. As long as you have a control, you can do. My suggestion, either follow accrual or realization basis, and not both. However, I will show you the configuration of both, how it needs to be done in TallyPrime. Now, TallyPrime supports both, which is accrual, which is currently that is existing in the TallyPrime. All the screens of the TDS and TCS are on existing accrual basis. What is newly added is the charging TCS on receipt, which is advance, or on the sales or realization. So this is something which has been added. So you have to now understand how you can do the configuration. So you can do at a TCS ledger, whether you want to support it along with the sales or you want to support it along with the realization, you have to create the configuration. What are the configurations that you need to know is creating this instance of TCS, whether it is on accrual basis or realization basis, mapping the sales ledger. Like I've said, the sale of goods, it is applicable, sale of services not applicable. You want to capture at the instance of the sale. You have to also capture at the instance of the customer. Like if I'm selling it to a foreign party, not applicable. If I'm selling it to a government, not applicable. So that also you have to capture. Then the taxes, view the TCS ledger which you are creating, should it be on accrual basis, on realization basis? So these are the things you should be configuring. So let's look at how to do the configuration. Lastly, very important, one should be knowing, Tally has a feature, even though you have configured everything in the masters, while recording the transaction, you have an ability to override the transaction. So let's come to the Tally and look at the demo of how it needs to be configured. Here is the Tally. So I have created a demo for which have the transactions which have been already recorded, and just a test company for you to, there are no vouchers entered. So just to show how to create the configuration. If I have to go to the demo company, okay. So what is more important for you to know is this is just 0.1%. So the quantum will be very small. I hope the Tally screen is visible. Let me see if there are any questions that have come in the chat.
So I think the Tally screen is not visible.
So It is visible, sir.
Okay, okay. I think I'll correct it from mine. Now, yeah, now it's yeah, it is visible. Thanks.
Okay, okay, all right. So let us first understand the configurations that needs to be done in the tally. Now, here are the transactions which I have already recorded. You might have little challenge in navigating TallyPrime with the Tally ERP9 because you got used to those the thing. However, 95% of all the shortcuts which you have been using, they have been retained. You will be using it, and there are more advanced features which have been grouped and used it. So I have created already in my display account books the sales register. So there are various transactions I have created based on case to case. Before getting into this transaction, let us understand the grouping of it. Let me create the group for you and show it. The first and foremost, while you create a TCS item, so if you are creating a TCS the thing, you need to have definitely the TAN number available. Now, I am creating a group classification for the TCS. What is that I want to create is, let's say I want to create something called TCS on sale of goods. Now, you have a choice whether you want to do on realization basis. So you are creating a group. So whatever the ledgers and duties and taxes which are created under this group would fall under this. So I am saying 206, and with PAN you can configure as these rates change. You can definitely configure whatever the amount you want to do. Actually, it is 0.1 with PAN, 1% without PAN. You can define various things. Here is the most important thing, and all this, whatever you are seeing, the numbers and parameters, all these things are changeable or can be changed. The important part of it is the tax collected basis realization. If you see on the top, I have given TCS on sale of goods on realization because I want to collect TCS only when I realize money. I will say this as yes. Do you want to give any threshold limit? I will say the choice is again yours. If you want to, anyhow, it's a regular party transaction, you want to avoid confusion, you want to do it, you can set it to 0. You can say I will do it 50 lakhs. Okay. And here is the more important thing. In a transaction value of 55 lakhs, do you want to collect only on the value which is exceeding that 50 lakhs, which is actually that 5 lakhs? The answer is yes. Here you say yes. Then you have defined a parameter that this is how a transaction needs to behave. So when someone is creating a recording a transaction in Tally, there are two main things they should be aware of. One, legal provisions. Second, the configuration of it. This configuration, what you have seen, can result into multiple permutations and combination. Someone can create account it on accrual basis. Someone is saying on receipt basis. Receipt basis, set this threshold limit. Some transactions can be from 0 and something can be from 50 lakhs. So like this, you will be creating various classifications. Now, once the classification is created, you will have to create a ledger. You will be creating a ledger for TCS collection. So TCS to collect. Now you can create this ledger because this is where you are recording the transaction. You created the group of the classification. You are creating a ledger for where the actual transactions have to be posted. Now I am saying TCS to be collected on actual realization. I will create this. We know it should be under duties and taxes. Here, very important, please select TCS. Most of the people do not really do the proper classification. Look at what happens on the screen. The moment I select the TCS, the screen which is applicable to, automatically it is appearing. See, I have just created multiple things. You can create, as I said, there are multiple combinations. You can define the group the way you will understand. You can say TCS only exceeding 50 lakhs. Now you might have some customers who are just one-off transaction and you want to restrict it more than 50 lakhs. You might have some customers you want to do it for all the things. So you can create those nomenclature. Like here you can see TCS on realization. There are two things. So I can say here on this is one-off transaction. So calculate the tax value on exceeding exemption limit. I am saying yes. So, and what date you want to make it applicable. We also have a rate history change or transaction history change. Whenever you are changing it, you can track it. So I can also create multiple ledgers, multiple groups as a combination thereof. So this is the first thing. You set the activate the TCS in F11 statutory masters, enter the TCS. Second, create the ledger. Then comes creation of the sales ledger and actual posting of the entries. I will jump to the another company which is there is TCS sample company which has been created. And if I go to display my statement of accounts and statistics, I've just created a sample entries. Let me, yeah. So you can see I have created 2 receipts. I've created 8 sales entries just for your understanding how this transaction can happen. Let's look at these sales entries. There are totally 8 sales entries I have posted. Here there are different customers and different scenarios. By different customers, different scenarios. One might want to create only on realization basis. Some might want to create only on accrual basis. Here I have created both the entries so that you get a flavor of how it will work. So the case 1, the first voucher you are seeing is on realization basis. Case 2 is on accrual basis. Now in case 3, that is what I have explained. In the tally, whatever the configurations you have done, you also have an option to override at the transaction level. And the priority at which the tally chooses in recording the transactions is you have not set anything in the ledger or anything, but at a company level, you have created one configuration. So that configuration can be adopted. After the company level, you have inventory. So you create a configuration at inventory level, then that configuration would be adopted. Then you have ledgers, which are primary thing which participate into your trial balance. If you have done a configuration into the ledger, that would be adopted. Lastly, at the transaction, if you see hierarchy of the tax classification or tax accounting, whatever you record, specify in the voucher, that's the first level of priority. You did not specify anything, then it will look at the configuration which is there in the ledger. Nothing in the ledger, the parent of the ledger, the sales group which you have done, it looks for that. Nothing is there, inventory group, inventory item and inventory group, then at the company level. This is the order at which the tally classifies the transaction. Let's look at one by one. So the first entry is the sale of goods. First entry is sale of goods. So I have made a sale to this party. The warning that came in is like you can only have 16 digits. I just created the voucher number for you to really understand it. So here is the party where I have made a sale of goods. Let's look at the party classification. In this party, here I have created, you can see on the screen, the party has been configured as a company resident and is TCS applicable to it. I have mentioned it as yes. I have mentioned it as yes. So you have to choose whether the TCS is applicable or not. If you do not specify, to this party, the transactions will get changed. So this is the customer level configuration. That's what I said. We have to do 3-level configuration: income ledger, customer ledger, tax ledger, and the group, the tax parent group under which it falls. Now the same party, if I have to see for another party, let's look at a government customer for ease of understanding. If you look at the government, the transaction, so I have mentioned the TCS is applicable, but the buyer type here I have mentioned as government. Now this specific TCS which is mentioned is 206. I do not want it to be applicable. So that is where the section, the TCS classification to this is important. So basis my combination of this, the TCS classification would also be impacted. If I say no here, blanket, it doesn't really matter what is the combination which is there below. So that is why understanding and knowing of the configurations that needs to be done in Tally are very important. Now we have seen the configuration for the party ledger. Let's see the configuration for the sales ledger. Now here is the sales. I have created 3 types of my sales. I have created 3 types of sales. We know for services this TCS is not applicable. It is applicable only for these 2, the sales and sales realized. What is the sales and sales realized? I want to give a difference between the accrual on receipt basis. Here I have said the sales which is realized, I have said that this is a sales account. GST is applicable, the GST is a different configuration. Do you want to have the TCS be applicable for these ledgers? Do you want these transactions recorded under this? Should it participate on TCS? If you yes, then you have to say. A very important thing is, where do you want to get it participated? I have created both, one realization, one accrual. So I have classified the sales realization under the realization basis. Now, if you look at the sales accrual basis, here is okay. Here is a transaction where actually I have overwritten within the transaction. Yeah. So let's understand the entries one by one. We'll start with the simple thing. Here, the case 1 is realization. So the party Anand Enterprises has been chosen that the sales value is 70 lakhs. I should be doing the TCS on realization basis. Now, the moment I do TCS on realization basis, since it is selected, the sales is selected on the realization basis, it will be expecting that the collection of money will only account for TCS. I have 2 TCS ledgers. I have created TCS accrual, TCS realization. Even though I am selecting TCS accrual, the amount is not coming. Another beauty of Tally is whenever you select duties and taxes ledger, the value of the taxes would be coming automatically. If it is coming automatically, then it is a perfect classification. Even I select the realization, entry, it is not going to come because the transaction I have recorded it as sales realization. Now let's go to the second transaction, which is sales accrual basis. Let me go to the second transaction. Here I was doing testing, something was overwritten. Let me just do the sales. So here is a consideration of sale of goods on accrual basis. So I have made the sales that this transaction in the invoice I want to issue the TCS. Now for the ease of it, I am deleting this entry. Let me delete this line item so that so I have not accounted this and I'm just closing it so that you understand how this participates. And the best thing, another thing one should be knowing in Tally is Tally has a pre-configured thing. Whenever you are posting any entry, you can configure what are the ledgers that needs to be taken. Whenever you select a sales entry, all these tax ledgers are pre-filled. You post an entry, automatically respective values gets filled. I would always recommend that you can pre-fill it. So here TCS is on sales. Now, if the Tally is configured properly, the moment I select my TCS accrual, here is what I have said, the TCS is accrual. You can see the value is automatically posted. So the tally automatically captures a transaction basis the configuration which is done. Here is a situation where I am overriding a transaction. The ledger which I have used here, is the sales realized. The ledger is sales realized. Because it is on realization basis, ideally this should not have come. Now, that's what I have said, that the behavior of the tally is on the transaction, you have an option to override it. Now, when the moment I select the sales realized, by default, you have seen that it would be coming as whatever is the transaction. It comes as when I say sales realized, this is what it will be coming. Now, I am saying that, okay, I want to override it, saying that please consider this as sale of any other goods accrual. How do you activate these things? In your F12 configuration, whenever you are doing a transaction, you can see the additional thing. The same is applicable. Right now, I have said no to the GST. Otherwise, even the GST related transactions. So at the transaction level, you can alter. So I have just enabled it so that if I want, I can override during the transaction data entry. I can do a override of the transaction. So I have selected it as an accrual. In a normal course, if you have seen in the first entry, let me also delete this. Yeah. So in the first entry, you have seen, even if I select a TCS ledger, the tally will not post it. But since I have overwritten it, the moment I select this ledger, the tax values have been automatically calculated based on the specified percentages. And here the quantum of the TCS portion will be low, even though there's a 84 lakh value, the TCS value is only 3,400. So it is computed based on whatever the percentages you have set, 0.75%, whatever you set, it will be calculating basis that. And I am saving it. The moment a value is automatically coming it indicates that the transaction is correct. If the value is not coming correctly, then you know that something is wrong. Here you can go on more details and you can do various analysis. And in the next version of the TallyPrime, what I am told is another quick information like your tax analysis. You want other related the reports which you have been checking. So basically GST analysis, the TCS analysis, all these analysis, they are bringing it on the go. Here you can see the value is 84 lakhs. We have set, please do TCS on value over and above 50 lakhs. What is the value over and above 50 lakhs? It is 84 lakhs minus 50 lakhs, which is 34 lakhs. 0.1% of that it has happened. Now, in the future transactions with Unnati, since 50 lakhs quota is exhausted, it will be taking from the full value. This is how it considers. Now, this is a normal transaction. Let's go to a government transaction. Now, in a government transaction, we know, even if I classify TDS, TCS, accrual realization basis, since the party is not subjected to TDS, so this transaction will not be participating for the TDS or TCS. So even though I select my TCS entry, so nothing would be calculated. I selected accrual, I selected receipt, nothing is calculated. The sales ledger, I have set it as accrual. Since it is a government party, there I have defined the TCS is not applicable. So it follows the behavior. Now, if you for some reason you say that, okay, it is not, you want to do TCS, change the classification of the party and you will be able to do it. So likewise, you can do the transaction. One last couple of more entries. I have said that if it is a service where TDS is applicable. So here that TDS is applicable. So in the transaction where the TDS is applicable, I have mentioned, okay, this is a service customer, but the transaction is AMC services. Here I have mentioned the TDS TCS classification is other than goods. If you notice it here, this is consideration mentioned here is other than goods. So since it is not goods, so this transaction is not subject to TDS, is not subject to TCS, it is subject to TDS. So the configuration is considered in Tally accordingly, and TCS is not done. This is another question people generally ask: is TDS and should the GST be computed including TCS value? The answer is no. Do you want to compute TCS including GST, excluding GST? Again, the choice is yours. However you would want to do it, you can do including GST, excluding GST. Here is a transaction where we have participated the GST ledgers, and on the generally everyone collects TCS on the total value including the GST amount, the final invoice value on that, because the words used is amounts realized, the realization would include participate in the taxes. So system will automatically do the computation of 0.1% on the value over and above 50 lakhs. Okay. So the last one, when there is PAN is not given for this customer, I have not defined the PAN. While providing the PAN details, the PAN information is unknown. The moment the PAN information is not set, the TCS is automatically calculated to 1%. In as contrary to 0.1%, it has now connected 1% on the value which is over and above 56 lakhs. So 6 lakhs into 1% is 6,000. So this is how the various entries can be posted. Now what is next after posting the transactions? So you have to file the returns, and filing of the returns is again pretty simple. First and foremost, you should be able to view the data. So if you go to your display the statutory reports, under display statement of the statutory reports, we have been familiar with the GST. Now the new TCS reports, you will be able to see if you have, by the way, you can generate an FUV file from the Tally and you will be able to file it. And we all know the government CPC portal is completely undergoing. So between 1st June to 6th June, it is shut. Even NSDL is trying to integrate, NSDL services are also integrated with the CPC. Very soon, from maybe from next year, you will be able to file everything under in one platform. So let's look at what are my returns. Let us look at the returns. The thing. Firstly, let me show you the details which I have filed. The details which I have filed. This is quarter April to June. In all this transaction, you can see the transactions which are included in the return and which some need some correction because the PAN is not available, or I have overridden the transaction. So it is asking you to review and say if you are okay with those things. Basis that it is saying that okay, these are the transactions which have been collected at normal rate. So whatever is the transaction that is applicable, it has been collected at a normal rate. These have been collected at a lower rate. I have said that it is a government transaction, do not do the TCS. And there are certain transactions which we have given, and up to 50 lakhs, the blanket exemption I have taken, do TCS over and above the 50 lakhs. So 50 lakhs is applicable. So the TCS did not happen to this transaction. So like this, you will be getting various reports in Tally. So what's next? Once you have the returns and reports, what's next? Okay, we have seen the demo is filing of the returns. Both 27 EQ, the statement, and the certificate which needs to be generated. The data that is required is an FUV file. The FUV file can be downloaded from the TallyPrime. Once that is downloaded on the government portal NSDL utility, you can just browse and select the file, challan file also can be downloaded from the NSDL and upload the challan file. Those who are familiar with filing of TDS and TCS return, this screen is pretty simple because these are the documents which have been downloaded and finally upload to the portal. So we have seen the various reports. I think we are close to 4 o'clock. Let's see whatever the questions the users have. And before taking the Q&A, I should, Arvind sir also is here. I'm happy to see you, sir. And this community for chartered accountants, the platform which is created is really beautiful, a very interactive platform, and especially more so for the chartered accountants, and the topics are being delivered by the chartered accountants, the relatedness would go up. I was very happy to see Venkatramani sir, my guru favorite, the faculty on GST also to be part of it and explaining the various questions. So I thank Tally for taking this initiative of creating the CA community platform. So with this note, let us go to Q&A.
Thank you, sir. Thanks a lot. But sir, you've been always with Tally, and look forward the same from you, sir. Thanks a lot. It was a wonderful session indeed. In fact, being a non-accountant person, I could understand a lot about TDS. It was that good. And with your permission, this will be recorded. It will be put on the portal. People can always come. And we expect more and more such wonderful sessions from you, sir. You've been always supportive to Tally, and look forward for your guidance as always, sir. Thanks a lot.
My pleasure. Okay, there are a couple of questions that have come. Let me take up those questions.
Sir, may I read out for you the questions?
Yes, sir.
Yeah. Sir, there is one question coming saying that whether there is an exception report for TCS not done for sales above 50 lakhs customer wise.
Right. So when you look at the transactions here in my when you go to the sales report, in that report you are able to see wherever the transactions which have where the collection at 0 or the lower rate. So Tally is going to list all those transactions which is done and not done. Now, why not done is applicable to you. It will show up the list of the transactions where the TCS is likely to happen, but you did not do it. Maybe government, maybe export, whatever be the including domestic, but you did not record it. So that report would be available, post which you can act on it, whether you want to do it like in that screen which I have shown you the various buckets, the information would be available. What I am also told is currently this information is grouped. The party TAN is not there. Even that report is also going to be available in the next release. After you go to that period, when you select the TCS by party, you will be able to see against each party the report.
Great, sir. Thank you for that answer, sir. Sir, there are a few questions in chat also. I'll pick up from there. There is one question from 1 minute, sir. From Mr. BB Chandra. Okay, and he's asking whether deemed export is also exempt from TCS, just like our other exports, which is also exempt from TCS.
No, sir. The deemed export is not excluded from the TCS because only for the purpose of GST, you have this benefit of the refund. But for the purpose of income tax, even if you are making a penultimate sale, you are exporting to an export house, who is further doing an export. For you, it is still a domestic transaction, TCS is applicable.
Darshan, next question. So one we
Sorry.
haven't. Yeah.
I'm sorry, actually, I was on mute. I'll just take up another next question. So here, there is one more question asked by BB Chandraji, asking that how anybody come to know while creating the party ledger, how much will there be turnover or receipts when I'm creating a party ledger?
So when you're creating a party ledger, you don't need to do anything. This is one, again, beauty of my advantage of using technologies. You just create the party ledger, you keep doing the transaction. In the group you have set, do TCS only when it exceeds 50 lakhs. From your side, you will be keep doing the transaction. Tally will automatically cumulatively collect how much value it is exceeded. The moment it crosses 50 lakhs, Tally will automatically do it.
Great. So Tally will take care because we have specified in the nature of goods that 50 lakhs threshold, and that's why it will wait till 50 lakhs, and after that it will charge.
Correct.
Great. Thank you for that answer. Sir, there is one question from Krishnan sir. He's asking TCS collect for invoice or debit note. TCS collected for invoices only or for debit note also?
It is both invoices and debit note. Okay, there is a little difference in understanding the debit note and the credit note. Now, generally, credit note means if you are crediting a party, it is a credit note. If you are debiting a party, it is a debit note. I would put it this way: TCS is applicable on sales. If your debit note is akin to sales, so I have made a sale to you. The value of the sale is say 45 lakhs. But my accountant made a mistake. He has sold 2 products, but he has billed only 1 product. If I add another product, it will become 90 lakhs. Already invoice has been issued for 2 products, but only value chosen 1. So what I will do, I will raise a debit note. So this debit note is akin to sale, so equal to sale. Hence TCS would be applicable. There's another kind of debit note. I have made a purchase, and for some reason the goods was not of good quality. I have returned the goods. When I return the goods, I debit my whomsoever is vendor from whom I purchased. For that transaction, TCS is not applicable.
Okay. So very specific. If it is related to sales, yes. If it is related to purchase, no. Right,
Correct.
sir?
Yes.
Okay. So, sir, we have a question from Sitaraman, and here it says whether turnover of a particular buyer of rupees 50 lakh considered earlier year.
Okay. The applicability for seller is the previous year. 50 lakhs is for the transaction value during the year.
During the year. So we have answered major questions.
Darshan, it's in Q&A also we have had questions now coming up.
Yeah, I'll just complete this in chat. What about credit note, sir? Somebody is asking about credit note also. So how exactly? So in this also, we take similar thing of if it is related to sales, then yes, and purchase no, same thing.
Okay. Sales, yes. Purchase, no. But there is a small again hitch here. If I am on an accrual basis and I have collected TCS and remitted to the government, later customer came back and said, okay, I don't need it, and he has returned the goods. There is no option of whatever the TCS which I have remitted and the form I have issued to nullify it. I have already issued. I have to collect the portion of TCS. I cannot reduce that. If it is on a realization basis, in a credit note, I have anyhow did not receive the money, so there is no concept of TCS.
Sounds good. So now I'm taking questions from the question and answer area. So how to record the TCS entry under realization mode and manner in which it can be intimated to the buyer?
Okay, good. I think I did not actually show I was only explaining on the sales accrual. On the receipt portion, okay, let me just show you one. Okay, here is a party. I have the first actually transaction where I made a sale to Anand Enterprises, 70 lakhs. And I have mentioned that this is the TCS on realization basis. There is no entry. Now, when I collect the money from him, let's say I have collected 55, I'm collecting another, let's say 10 lakhs. So when I am receiving the money from him, F6 receipts, and let me post the entry, let's say I have received some 12 lakhs. Now, when I receive the money from this party, automatically, I just need to set the TCS. System will calculate the TCS is applicable, and it will record this automatically, and this entry will automatically participate into the TCS entry. Now, in realization, the challenge is you have to make sure you select it. That is why, even though it is not strictly as per the law, for the practical is, I would also suggest use accrual basis and not realization basis. This is how one records the TCS on realization.
Right, sir. So I'll take up another question. Multiple customer ledger branch wise with the same PAN, whether aggregate sales above 50 lakhs, can Tally calculate for TCS purpose?
Okay, I have to check with the tech team. I don't know. The question here is, the 50 lakhs is not at a ledger level. It has to be group, to be considered at a group level. I think answer is no. But Darshan, do you have any idea?
Yeah, the answer is no. So if two different separate ledgers are created, then we cannot do it. But however, there is provision in Tally for one party, you can have multiple addresses. So at that point of time, this feature can be used, and then it would be one ledger only. And then that 50 lakh for the all the other branches can club together, and it will give the correct calculation.
Yeah, in fact, this is a very right feature. In fact, I have a client who has created 1,300 addresses for a client. It is basically some insurance related service provider, each branch office. So you can pinpoint and know which branch office made the transaction realization. So that's the best feature. One should make use of it. Yes.
So you are saying 1,300 addresses in one ledger?
One ledger. I was surprised to see that.
Definitely, I am also surprised, sir. So we have one more question from maybe Chandarji. Sir, collection of TCS can be included in invoice when accrual system is followed, but when realization system is followed, we raise debit note.
Yeah. So there is no concept of raising a debit note. It is basically, I have shown you that Anand Enterprises, when I receive money, the extra money which I receive, I just park it into that the TCS ledger, which is under duties and taxes liability obligation to pay. Whenever I pay the money to the government, it automatically nullifies and becomes zero.
Great. Sir, there's one question Manishi is asking. I think we have taken it up, but he has given one example, so I would like to take it this. Sale is in financial year 2021, and the amount was 55 lakh rupees. But amount received during previous year was 45 lakh rupees. Okay, and remaining 10 lakh was received in the 21-22. Right. So how do we address this?
Yeah, so since you have set the threshold limit over and above 50 lakhs, only TCS is applicable. In this transaction, it will not participate. Like if you are accounting, if you are doing on a realization basis, year one you realized 45, year two you received 10 lakhs, both the year you did not exceed 50 lakhs, applicability of TCS will not happen. If you choose realization basis in Tally takes care of it.
Sir, this is also one interesting thing. In case one has selected to collect TCS at the time of realization, in case the party does not pay TCS separately, how do you go about when inclusive payments are made?
Okay, so this is actually the on-ground reality. On-ground reality is on-account payments. I made a sale of 50 lakhs. Let's say I made a sale of 60 lakhs. What did customer pay? He paid me some 20 lakhs, 30 lakhs. So he's giving me in bits and pieces. Now, how do I do the TCS? You have to do it on a reversal basis. Like you have to consider TCS is inclusive of that, and you have to do. That is where I would suggest you go it on an accrual basis, and this is very 0.1%, and it is a very small amount. It would be easy for the other person also. They know that okay, so much has to be paid, and it has to be offset.
So just on input on that area, sir, we have taken few requests in this regards, and we have forwarded to our R&D team that if we can pass inclusive TCS subject in our receipt transaction. So that was one point. And second thing is that looking onto the ground reality, people have really suggested to go for realization basis rather than accrual basis in this regards. I'm sorry, the reverse. When people have suggested for accrual basis than the realization basis.
Yes. So looking at these challenges only, I have suggested go for even though law is realization, go for accrual basis. And by the way, I did not introduce Darshan. So whatever, if I have made any mistakes, okay, Darshan was brought here to correct it, because though I use Tally, but Darshan is the Tally Pro.
Please. Sir, there's one question from Sitaramanji. Here it says, sir, TDS on purchase of goods during the year exceeds 50 lakh, then whether TDS is to be made on entire purchase value or when the purchase value exceeds 50 lakh.
Okay, so this, when it comes to the TDS is on the full transaction, though it is not for the subject question. TDS accrual basis on the full value.
On full value. Okay, so I think this rule is coming in near future.
Correct.
Near future. So friends, please get rest assured for that key, if it is for previous transaction also, that is already there in Tally, but if it is only for above 50 lakh, then Tally will make a provision and it definitely will provide you in the Tally upcoming release. Suggestion taken. Thank you, sir.
TDS is at a transaction level, which means like if I do a transaction, first transaction, second transaction, not applicable to TDS, it is within the threshold limit. The next transaction is applicable for TDS, which is above the threshold limit. That is currently already built in the Tally, because the section 194 features are the same thing. So that is taken care.
Great, great. Mr. Vinod is asking, if value of turnover reduced to 50 lakh after sale return, what is the applicability of TCS then?
Theoretically, TCS is not applicable. If you are using accrual basis, you have no choice. If you are using realization basis, TCS is not applicable.
Yep. So one last question, under realization method of accounting, should TCS entry to be recorded at the time of sales or at the time of collection?
So in my session, I have mentioned that there are people who use hybrid accounting. So they account TCS at the time of sales, but they do an offline computation, make a payment at the time of the receipt. Accounting is left to the management choice. So however you want, you can actually follow.
Sir, we have a few raised hands, so we can allow them to unmute themselves and ask the questions. May I do that, sir?
Yes, sir, please.
Yeah, I open Shiva Kumar, sir. Shiva Kumar, sir, you can unmute yourself and ask the question. Mr. Shiva Kumar, and we are having Vinod ji, and we are having Vanraj ji. Okay, so you can definitely ask question. We have opened your session for, you can unmute yourself and ask the question.
So Darshan, there's also 2 more questions on the chat, I think. So meanwhile, they can come on speaker.
Yeah.
Surya Murthy Ramakrishnan, you can read his question.
1 minute. Yeah. If credit note raised during the month of sales, whether TCS can be adjusted?
If credit note is raised during the month of the sales and you're following accrual basis, the answer is yes, you can adjust it because it's an internal transaction. However, currently in the Tally, I don't think this option of net off is provided. Darshan is like
it is not provided.
Yeah.
Sorry, it is not provided. We'll take it as a suggestion how far this goes into the implication, because here we need to take care of the GST also as the subject and TCS also to be considered.
Since I am reversing my TCS liability, which I have already accounted for. Yeah, so there are with the new provision, there are multiple challenges that have come up, and there is different permutation and combinations. But yes, yeah.
Since it is not yet filed and it is not yet the payment liability do have generated, but it can be adjusted because of its reversal. But need to see into this rule, and I think we can just think about it, sir. Yeah. Meanwhile, Mr. Prem is asking, what about purchase, sir? If you can give some better understanding about this, it would be great. With that small question, we will not be able to address this.
Yeah, I didn't understand the question.
Sir, we are having one question in the question answer area. An anonymous attendee, whether while filing GSTR1, TCS amount is uploaded.
Yeah. So for the purpose of GSTR1, if you see section 15 of GST valuation rules, the value is would excluding the taxes. We also have a CVIC circular on this, especially on the sale of motor vehicles. This question came up will be much before the new TCS came up. So the CVIC also has clarified, saying that the GST is applicable before TCS and not after TCS. So TCS is applicable after the GST amount. Since the GST is computed on the taxable value before TCS, while uploading to your GSTR1, so the taxable value would also exclude the TCS. Because of that, even in the e-invoice, so TCS been asked to club under other charges which do not participate into the tax calculation.
Sir, I think Prem sir has given some clarification on the transaction purchase entry in TCS. TallyPrime automatically calculation value. Kindly explain, sir.
Sir, when you are recording the purchase entry, which is automatic of the sales, you will be recording various heads like purchase account debit, the GST input tax credit account debit, and your TDS or TCS ledger, which is right now there is currently no mechanism of reconciliation of 26 years and tally. In future it may happen. You are manually recording these debits as the various things and creating a liability to the vendor. So since you have no obligation to file any returns, they do not, the TCS do not participate into your the tax computation ledgers.
Yes, truly well said, sir. Since this type of transaction, this purchase transaction TCS will not go into any of my TCS return, and it will not be set off against that. So it makes no sense with that. That is one pointer. Second pointer is that the old method of tally for calculating any tax things, okay, that you can make use of it. So you can create a TCS ledger or the TCS on purchase or something like that. You can create it under duties and taxes, but do not tag it with the TCS or GST or any tax which is there. So there is one option called as others. So in that others, if you write the rate over there, then it will help you for a little bit of auto calculation, but you need to be neat enough into selecting that. So just verify that option, but do not use tally's TCS, just select others after duties and taxes. Yeah, so that is done. Similarly, Vinay Kumarji is asking, similarly, while generating e-way bill, TCS is included in e-way bill also?
Yeah, so while generating e-way bill, TCS is also included because the e-way bill has invoice value. There the words used is consignment value is the total value of the thing including GST. Now for the purpose of matching during the check post, so one user wants to match the physical invoice value and this. So if there is in the invoice, if TCS is there, people record in the e-way bill with the TCS. If in the invoice TCS is not there, people exclude the TCS in the invoice so that to ensure that there is no hassle with the officer who is intercepting at the check post.
Thank you, sir. So we will take last two questions. Mr. Vanraj is asking, sir, while filing TCS, whether is late filed return, how to do entry for the same in TallyPrime?
Whether late filed or regular filed, there's nothing, I don't understand the question. Maybe Darshan, do you have any answer to it?
I have not seen it, but I know in TDS we had that option that whenever we used to pass, if was there any interest calculation or late fees, then we had the provision in TDS. I'll have to verify in TCS whether we are having the same way of doing it in TCS. Yeah. I'll have to check that, sir. Right. But we 99% we will be able to do it, but without me personally seeing, I will not confirm it. And question from Vanrajji, in case of GTA, how to do entry of TCS?
Sir, again, GTA is provision of services, so the concept of TCS would not arise. It is only TDS.
Simple answer.
Yeah.
Great, sir. So almost all questions have been done.
Good.
And yes, sir, done from all sides, sir.
Great. Definitely, I should thank Darshan for coordinating and answering some of the questions, and Komalji for coordinating for the session, Arvind sir for giving an opportunity to be here and present to other fellow chartered accountants, my brothers and colleagues. So happy to have in the knowledge sharing forum.
Yeah. So the question round went on for half an hour, only proves how interesting and informative the session was. So now that's all the questions we have. So I would like to conclude the session. Firstly, by thanking you, sir. It was a very interesting session. Thanks a lot, Darshan, for being here and helping, sir. And to all of you, if I can see if you have any further questions and we have missed out to answer, I'm sorry we're falling short of time. You can write to us and we'll make sure that Venu sir do answer your question. And also some people are asking for the recording of the session. Like Venu sir mentioned, the video will be uploaded in the community page. You must have heard about our new page, newly refreshed CA community portal. That is community.tallysolutions.com. I've mentioned the link in the message also. So you all can log in and see the videos. So just not the webinar videos, it has a lot to offer for everyone. That is, you can read the articles from the industry experts. And we also have an expert onboarded, CS Venkatramani. He would be there to answer all the queries related to CA domain, taxes, compliances. And you can also get your query answered for TallyPrime as well. So we'll look forward to serve you better. Thank you all. I would like to conclude the session.